Welcome and thanks for joining us on EMII.com. I'm Ananya Bhatia with your hedge fund headlines. Today's Friday, March 5th, 2010. Alternative asset manager Aladdin Credit Partners has raised $573 million for its initial credit opportunities fund. According to FinAlternatives, the Connecticut firm has held the final closing of Aladdin Credit Partners 1 and its offshore counterpart Aladdin Credit Offshore Fund 1. The new funds are looking to invest in restructuring-related opportunities, including rescue financing, debtor-in-possession financing, and plan confirmation financing. Mitsubishi and Intesta San Paulo are the anchor investors for the funds. An Egyptian investment bank, EFG Hermes, is preparing to launch a $250 to $300 million private equity fund in the Syrian market. According to Reuters, the firm is opening a Damascus office in partnership with Syrian businessman Firas Talas, who will own 30% of the business. Talas will be the chairman of the Syrian division, while EFG has appointed Hazim Badrin as managing director in the bank's investment bank division and its chief executive officer. According to Bloomberg, EFG Hermes will contribute 10% of total commitments to its Syrian private equity fund. And in more hedge fund news, forcing hedge fund advisors to register with the United States Securities and Exchange Commission will enable regulators to access information and root out fraud. According to Reuters, Bruce Carpati, co-chief of the SEC's Assessment Management Unit, said registration will provide the agency with more information to crack down on abuses. The Commission has sharpened its enforcement division, but is seeking more resources to properly police markets, companies, and individuals. The U.S. government, along with many lawmakers, wants hedge fund advisors to register with the Securities and Exchange Commission. And long-short equity and global macro hedge funds reported positive returns for February based on the performance of the LAB liquid indices. The LAB long-short liquid index grew 1.01%, with increases coming mostly from long positions in the industrial and consumer sectors. The Credit Suisse Global Macro Liquid Index was up 1.14% as many managers benefited from long commodity positions in February. The global macro sector is expected to be up 2.33% year-to-date. Long-short equity funds fell 0.46% year-to-date due to increased global equity market volatility. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto our hedge funds channel online and read the full stories and latest developments.